The Nasdaq's been under pressure. Technology kind of in focus at this point as we watch yields pick up on the 10-year. Stephanie, we had Kathy Wood with us earlier this morning, and she was just talking about how she's very long on a lot of innovative names. Innovation is what she's playing on all of these things. She's not worried so much about technology suffering because of any increase in yield, because she doesn't think inflation is going to be here to last. She thinks a lot of those issues are getting worked out. You're not somebody who likes at least some certain areas of technology. You see it any differently?
Yeah, and of course, she has a longer time frame, like a 5-year time frame. I have a long time frame, but obviously I'm trying to manage on a year-to-year basis, too. I think, Becky, you have to step back and look at the macro environment to understand what's happening in this recent rotation. And the recent rotation has been into value from growth. It's been into cyclicals. It's been into reflation names. And the reason why I think it's important to look at the macro is because it's just really driving rates, right? So economic growth in October has actually recovered from the third quarter. If you look at ISMs, PMIs, retail sales. Inflation is everywhere. And I think some is sticky and some is not. The sticky parts, Terry Lundgren, in your excellent interview, he just said the same thing in terms of wages. They're high, they're going higher, and they're going to remain high. And it is sticky. And rents, of course, are also very sticky on the inflation side. So if you have a little bit better growth and a little bit higher inflation, rates are going higher for that reason, right? From 152 to 166, they could continue to move higher. And if this continues, the Fed can taper more sooner, and they can actually raise rates. And I think that that's what the bond market is telling you.
Yeah, so right, we heard the jobless claims number today, the lowest since 1969. So maybe that is even more evidence or more fuel to the argument that the Fed should raise sooner rather than later.
Yeah, I think if you look at the jobless claims and you look at, people are going out there, we're getting jobs, we are slowly reopening. It's not happening as fast as people want, but that also gives the Fed some cover. So you taper now, you watch how rates are moving. Well, we don't want a huge movements in rates. I mean, you get these quick jumps and you get some market dislocation. A lot of that also has to do with where people are positioned. And if you look at kind of the opportunities going forward, yeah, they were great during, when we were staying at home. And some of those stocks are fabulous, but really the true opportunity is, in the value stocks and the industrial stocks and the reopening plays that really have been using all the productivity elements of software, cutting costs, and that's where you're going to see some operating leverage, and the opportunity for investments to come through will be in the next 12 to 18 months of companies that have suffered.
So, right, you say you're looking at some falling angels that you think might be stabilizing here. Visa, MasterCard?
Yeah, I mean, the whole payment space, Becky, has been hit really hard. It started with PayPal, and then you had some concern about global travel with Visa and MasterCard. I mean, these are the fintech companies that are investing a lot of money, all three of them, for the future. And if you do feel that inflation, is going to come back, well, they have pricing power. It comes directly with what they're doing. So I like these companies. They've come back. American Express is another one in there. I think all these four companies are going to do well in the future. So you've got to look at companies that, as you've gone through earnings season, give us opportunities to invest high quality cash flow companies that I think you can have as part of a diversified portfolio.
And Stephanie, the areas you do like in technology are places where you could see some big CapEx spending, like Hewlett-Packard Enterprises?
Yeah, I have a big overweight in the semiconductor space, also in cybersecurity as well. And then, of course, enterprise IT, the recovery. And we got very good data from HPQ and Dell last night in terms of starting to see that spend recover. So I like IBM, I like HPE, Cisco. These are all ways to play it. And I think the valuations are very reasonable. And in some cases, you get a good dividend yield as well.